Hi, Alex. Welcome to the Power Talk show powered by Business Talks Weekly. Thank you for joining our channel today. So, before we start the conversation, can you tell us a bit about your background and, what led to the creation of Portfolio Pilot?
Happy to be here. Happy to get into all of that. Basically, I ran an AI company for 7 years before this, Iris Automation, and then sold in 2021. We bought a house in the Bay Area, started a family. We were doing a little bit of investing. My wife runs a startup as well in the biotech space. And I was trying to figure out what to do next, talking to financial advisors, wealth managers, private banker, and just couldn't quite get comfortable with the idea of paying 1%, 1.5% for someone else to manage our money for us. So, robo advisors, felt like maybe a solution, but, wasn't quite there, wasn't fully comprehensive. I wanted to be somewhat involved, kind of felt like non-personalized, sort of lowest common denominator investing advice. And then there's 1,001 trading tools, but I didn't want to become a day trader, look at signals and technical analysis. And what I really wanted was a coach. I wanted an advisor in the true sense of the word. I wanted advice personalized to my specific situation. And I couldn't find that anywhere. So I built something for myself. And here we are 3.5 years later with about $30 billion of assets on the platform. It's growing like crazy. We have this product, Portfolio Pilot, which is basically, an AI financial advisor that attaches itself to your financial life, accounts, tax situation, estate planning, all your different brokerages, crypto wallets, bank accounts, whatever. And then, I don't think we're quite ready for AI to manage your money for you. But the idea that the AI can find optimization opportunities, I think millions of people are open to that at this point. And, the hope is that, the system pays for itself and more, where, it finds all these little optimization opportunities.
Wonderful. So, would you mind to address what is the main challenge you are trying to solve with Portfolio Pilot?
A big part of it, as always with fintech products, comes down to trust. And so, we need people to trust us with connecting their accounts, right? And so, even before we ask someone to connect their accounts, we allow people to upload a screenshot of their accounts or upload a statement or manually enter or even just copy and paste their positions in to let people get a sense of what this product is about before you have to take that step. And even if you connect your accounts, we wanted to make sure that we have bank level security and 256-bit encryption, static, at rest, and in transit. We wanted to make sure we have proper access controls and read only access to accounts, or at least be able to give people the option to have a read only connection so that we can't make any trades within their connected brokerage account. Part of it comes down to like what kind of macro models have we built, right? So there's a bunch of Bridgewater people involved in the team, and backgrounds from hedge funds and Point 72, and so how do we make sure that we're building the right mix of AI with the right safety systems on board? And so, at the end of the day, it's not just one big LLM, chat GPT. It's a mix between traditional portfolio management models and modern portfolio theory, and, the kinds of models you might see on Wall Street, CAPM models and efficient frontiers and, this sort of stuff, together with modern machine learning applications and AI. And so all the way down the stack, it's about trust. And I think we've also taken a very different approach here where we try to get people one step into the product at a time. It kind of feels like many other financial services products. Day one, they say to start using the product, you got to send us money. All right, we're going to
Absolutely.
manage the money for you. You got to put your money into the brokerage to start using it. And I think that's a huge barrier for people. And so the idea that you don't need to move any of your money, you don't need to accept any of our recommendations, you don't need to take any of the optimization suggestions. You get a 14-day free trial. You don't even need to connect to your account on day one. All these things, we found sort of this foot in the door mentality, right? We want people to do one thing. That's kind of interesting. Okay, let me take the next step. Let me give a little bit more information. Let me answer a few more questions. And then, they see, okay, I'm at this score at the moment. There's 42 optimization recommendations waiting for me. I don't like this one. Ignore, ignore, ignore. Ooh, never thought about, adding this to my portfolio. Or I only thought about tax loss harvesting once at the end of the year, but not, on a monthly basis. As there's volatility in the market, there's natural tax loss harvesting opportunities.
Understood.
Or, I'm paying way too much in these mutual funds that I hold. Here's a better ETF to replace it with. Even in the kinds of suggestions we give people, there's an order and you don't need to take them all at once. And so I think that helps with trust building a lot as well.
So basically guiding to make better financial decisions. So when I was going through your platform, I see you integrate with Robinhood, Coinbase, but can we make a trade from Portfolio Pilot?
Yeah, we've integrated with something like 13,000 different institutions, everything from cash accounts and credit accounts to brokerages, crypto wallets, retirement plans. So you absolutely have the option to, do read only access for any of the accounts. If you want, you can enable this one-click trade access. We force you to have two-factor authentication. Even then, you have to add stuff to a draft portfolio, basically go to checkout, create this order execution list. And then, if you set all that up, then you can do this one-click trade from inside Portfolio Pilot within your brokerage account. And more and more recently, we've started thinking about this as this, truly financial super app. Right? The idea is that we used to have a human financial advisor, and the human financial advisor was great because they thought about, they had an understanding of my entire financial life. They would think about the tax implications of every sell that I make. They would think about holding a certain amount in an emergency fund and thinking about long-term planning, as well as, I'm planning to buy a house in the next couple of years. How do we think about matching the right risk, building an efficient portfolio? Yeah. I say, they thought about this theoretically, they should be thinking about all these things, right? If you actually had, one of the good financial advisors. And
Absolutely.
then today, we can basically do all of that in a completely automated way, and we can do it in a very personalized way for you. The chance that you have the same financial situation as anybody else on our platform is very low. And so we try to meet people where they are now. And then instead of telling people, yeah, this is all wrong. You gotta move. This is the perfect asset allocation. This is the exact percentage of tech that you need to have. And this is the exact percentage of crypto or developed market equities that you need to hold. We say, look, it might take years to get you on the right path and to get you into a truly efficient portfolio. You're putting new money into the market with every paycheck, every 2 weeks. Let's take the money and just slowly start migrating your portfolio in a better direction. That's the most tax efficient way to get you over the next couple of years into a really good state where you have an efficient portfolio. You have great downside protection. You're at the risk that you want. You're paying relatively low fees in your funds that you're holding. You feel comfortable managing your own portfolio. Everything is sort of connected across retirement accounts and cash. You're on your retirement plan. You've set up the right sort of life insurance and last will and testament and healthcare directive. And there's so much as part of your financial life. And ultimately, if we want people to trust us, it's a long-term game.
Absolutely.
We
Absolutely.
charge relatively little compared to a human financial advisor, based on some studies we did, we're charging 95% less than a human financial advisor.
Hmm.
And so it really shouldn't break the bank. Should, ideally it pays for itself. And we have this scoring system in the product, what we call our portfolio score. And so
Hmm.
we feel like you're on the right path if your score goes up, even by a couple points, every single month. For a
Wonderful.
lot of people, it's slow and steady. It's not the day traders that are trying to, make a killing every single day, beat the market.
So,
That's, that's really the focus. And I honestly haven't found any other product like that.
wonderful. But so, Alex, if you could tell me what is your ideal diversification of portfolio? What weightage would you give to an ETF, a stock, a mutual fund, or maybe gold and real estate? What is your ideal diversification?
So there's this general concept known as the efficient frontier. And so there's some mix of risk. If very high level, if you take more risk, then you should get more expected returns. It doesn't always work out like that because you really need to think about how all the different pieces of the portfolio, pieces of the puzzle fit together. And so what you really want is high expected returns and low correlation between all these different items in your portfolio. And so this notion of the perfect asset allocation wholly depends on the industry you work on, right? You don't want double exposure to the industry you're working in and where you're like where your new salary, your new paycheck comes from every single week. It depends on whether you own a house or not. It depends on, the options in your retirement plan. A lot of people have very limited options in their retirement plan. And so even if we have a perfect asset allocation, we think it's useful for people to diversify across many more types of securities than just equities and bonds. In a high inflation environment, equities and bonds have historically both gone down. And so we saw that with the COVID crash recently. It's kind of scary actually that the safe bond investments go down in your portfolio. And so if you're just holding nominal bonds, then that's scary. So there's all kinds of other asset classes that people could consider holding: real estate, inflation linked bonds, commodities, gold, crypto. And so part of it is simply just diversification across a whole bunch of different asset classes. Even within equities, right? There's so many different kinds of equities that you can hold. A lot of people think about stocks as like, okay, Nvidia, Tesla, Microsoft,
Yeah,
Google. That's what stocks means. But the difference between value and growth stocks and, thinking about small cap and large cap and developed markets and emerging markets and should you hold Chinese stocks or not? I mean, we don't really know, right? It's like there are truly just decades in history where American stocks have underperformed international stocks and emergent
absolutely.
stocks. And so who's to say that this incredible run that we've been on over the last 15 years, the American market continues like this?
So, this in this current situation, which market do you think will outperform?
So the way we're set up, we're a registered investment advisor with the SEC. And so because of that, we're allowed to give real financial advice to clients. But anything I say on a podcast or sort of public marketing, I have to be a little bit tempered and what the models say. And
Absolutely.
even the like one of the interesting things about uh, like our internet advisor registration is that actually no human on our team is allowed to give financial advice to people. All of it actually needs to come from the system itself.
System itself.
And so, we've put in place a whole bunch of different safeguards, and there's a whole compliance manual and access controls and algo reviews, to this core model to try to ensure that we eliminate human bias and reduce the amount of conflicts of interest and everything like that.
Understood. So,
I will
in
say
this
that
case, like,
there's a significant amount of geopolitical uncertainty recently. So these macro streams and influences into the models are absolutely being taken into account, and oil prices changing, and those things affect volatilities and the expected returns for securities throughout the entire platform. And so it is pretty cool to just see this like dynamic system react to what's happening in the world around us.
And so, what is next for Portfolio Pilot? Are you expanding into different geographies? Are you integrating with, like you said, you're working with AI, but are you integrating and building your own system to make better decisions?
Yeah. Constantly the system gets better. Everything from fixing data issues, because we deal with a lot of data, as you can imagine, making more robust pipelines, making the system faster, making it more reliable. A lot of it goes into psychology too, right? And so, how do we get you to sell? Say you have 40% of your portfolio that's Tesla. How do we get you to sell a bit of your Tesla position? I'll tell you from experience that telling you to sell 80% because, some math we did in the back end, people say ignore, there's some reason why this person is okay currently holding 40% Tesla, right? Maybe they feel like they have some insider information or they work in tech and that's what they understand, or they're worried about the tax consequences, or you really have to take into account the psychology. You have to give them something to buy. You can't just say sell this without telling them to buy something else. You have to calculate the taxes. And so if you calculate the taxes, you really need to understand their whole tax situation and historical transactions and the cost basis. And there's almost this whole extra product that we built just to calculate the taxes, to be able to recommend a better sell. If we think about the psychology, a lot of people don't even know what they hold across everything they have.
Mhm.
And so we found that there's a big difference between, telling you to sell $40,000 of this position versus telling you to sell all $40,000 of this position. Like one word difference, including this word all, makes it clear to people that we want you to exit your entire position.
Fully.
Even then, people want justifications, right? If we tell someone to buy gold, for example, there are so many reasons that people need, right? They say, we need to understand what is the model forecast for gold. But that's not enough. Yeah. I already hold some gold. I already hold some gold in my portfolio. Why isn't that enough? We need to justify that. Why are we recommending you buy this very specific gold ETF here rather than just straight up gold bars or any one of the, 40 other gold ETFs? And we need to think about the expense ratio of that gold ETF, maybe trading volume, eccentricity. We need to think about where the cash comes from to buy this gold ETF. We need to convince people that today is the right day to buy it rather than just waiting another week. Gold might fall another
Yeah.
week, next week. And so, does the timing really matter? I mean, there's so many different things that go into justifying one simple sell with a bit of cash. And so, getting all of that right, we keep tweaking it. And you could think about the most impressive thing that we've built as a company is actually our feedback machine. I'm on the phone constantly with users. We have all kinds of different ways within the product for people to report issues, give feedback. We are constantly emailing people and asking them like, "Hey, why did you do this thing?" Or, "Why haven't you clicked this button yet?" We send emails out, we look at engagement, we use the product ourselves, right? First and foremost, this is just like something for myself. And if there's something annoying for me, it's probably annoying for tens of thousands of other people in the
Yes.
platform. And then very quickly iterating on that. Every single Monday, we do a release, and we like to think the system gets better and better and better and better. And the difference between where we're at right now and ringing the bell on the stock exchange with our IPO is simply just 1,000 more iterations.
Sounds great. So one final question, Alex. I went through your website and I saw there is a page dedicated to horror stories, or share your horror story. So I want to understand from you, what has been your biggest horror story in the financial market?
I hear a lot of sad stories,
Yeah. Yeah.
unfortunately. I've probably spoken to 1,000 or more users or potential users at this point. And a lot of people learn from their mistakes, right? They were self-directed investors because of something that happened with some human financial advisor at some point down the road. I spoke to someone recently that this feels terrible, right? They are trying to gain a little bit more autonomy. They had about $500,000 with a human financial advisor, and they kept thinking like, why am I paying, 1% fees? Are they really doing something that I can't do myself? There's tools out there, there's self-directed investors. And so what she was doing was, every couple months, she would take about $20,000 and move it into her own account, and she was learning, and she was taking some online courses, and she was starting to use Portfolio Pilot, which is why I was starting to talk to her. And she's moving money slowly, sort of dipping her toes in, managing some of her own money, buying some ETFs, not really trading, but just getting a little bit more confidence in her own self-directed investing. And at a certain point, after moving about $100,000 over, this financial advisor sent her an email saying, "Hey, I'm going to block any more transfers from your account. This is starting to look like money laundering, and I don't want this to get flagged by the tax authority. And so, like, I'm just going to halt any more withdrawals from your account, until we like give this a break for a year or two." And it was one of those things. It was like, "Hey, I'm the expert. I'm gonna say some scary stuff to you,
Yeah.
to stop you from taking any more of my fees away." Absolutely horrible to hear that. And she got so pissed that she ended up actually withdrawing all of the money. And like this guy fought her for 3 months going through this, but finally, she got all of it taken out, and she's now managing it all herself. And so I see that as like a net positive, but why do people need to go through that?
Yeah.
That's absolutely no reason for that. And so part of the reason why we put up the horror stories, as you can imagine, part of it is just marketing. And, I want people to visit portfoliopilot.com. But
Absolutely.
part of it as well is just, I think the more these stories get shared, the more people realize, oh, I got an email like that. Maybe I should question that email. Maybe I should get a second opinion here. And so, if we help make the financial advisor market even a little bit more transparent, even a little bit more honest, we'll have done our jobs.
Absolute.
If we
Absolutely.
replace it entirely, I'm also okay with that.
Absolutely. And for our listeners who want to stay away from the horror stories, please visit www.portfoliopilot.com, sign up, and if you use the voucher podcast to get 1 month of free gold subscription.
There we go. Exactly. And if you have any feedback, just reach out directly. It might be me on
Absolutely.
the other end, constantly trying to improve the product. Thanks so much for having me on today.
Thank you, Alex. Thank you so much. It was a wonderful conversation.
I love it. You have a great day.